topics. We will be able to come back to this particular topic, and also we discuss some 𝐼𝐍𝐉𝑠 which are theoretical in nature, but specifically I'm saying we have 3 𝐼𝐍𝐉𝑠 which basically involve computation. I want us to go straight to the first 𝐼𝐍𝐉𝑠 here, to the first 𝐼𝐍𝐉𝑠, that is 𝐼𝐍𝐉𝑠 21. 𝐼𝐍𝐉𝑠 21. Remember, we have said 𝐼𝐍𝐉𝑠 in full is International Public Sector Accounting Standard. Basically, what that means is that if you work in a public sector entity, you are an accountant in a central government, you are an accountant in a county government, you are an accountant even in any standards. So 𝐼𝐍𝐉𝑠 21, this basically deals with the impairment of the non-cash generating assets, impairment of non-cash generating assets, impairment of non-cash generating assets. And actually, the first thing, if you can be able to recall, in our first topic in advanced financial reporting and analysis, we did something to do with the impairment of assets. And maybe I hope those who had not joined then, you have already watched that video. I think the videos for the first 3 classes, they cover something to do with the impairment of assets. But maybe I can just remind you, what do you mean by impairment of assets here? What do you mean by impairment of assets? Impairment of assets. So impairment of assets, we said that this is the reduction. It is the reduction in the recoverable amount of an asset, below the carrying amount. In other terms, here we say an asset is impaired if the recoverable amount of that asset is basically less than carrying amount. So when we talk about the recoverable amount, this is basically the amount which the company can be able to recover from the asset, either by selling the asset or by using the asset. So we know if you own an asset, like you have a business, you own an asset. As a result of using that asset, you generate some cash. The use of the asset generates some cash. So how much amount can you be able to generate from an asset, either by selling it or by doing what? By using it. So that amount you can be able to recover from an asset. If that amount is less than the carrying amount, and in this case, I hope you can be able to recall what is the carrying amount of an asset. This is basically something we came across in the previous topic. Carrying amount, you can be able to remind us the other name for this. The carrying amount of an asset. Carrying amount of an asset. Carrying amount of an asset, yes, this one is the same with the net book value. It is that particular value at which an asset is recorded in the statement of financial position. So this is basically the net book value, which is computed by taking the cost minus accumulated what? Depreciation. So basically what that means is that if the value at which an asset can be sold at, not sold at, rather, the value at which the company can be able to recover from an asset, either by selling it or by using it, that amount is less than its carrying amount, then in this case, we say the asset is impaired, because a company is required to state an asset in the statement of financial position maybe at the current market value. The current market value of an asset is actually the same with the recoverable amount. So mean that if, for example, you own an asset and maybe you can sell that asset at 2 million, and maybe its carrying amount, you have recorded that asset in the balance sheet at 3 million, then there is a problem here, because the value for this asset in the balance sheet is how much? 3 million. But if you want to sell it, can you sell it at 3 million? No, you can only sell it at 2 million. So basically, we are saying the value at which an asset is recorded in the balance sheet should always be equivalent to its current market value. And therefore, we say at the IAS 36, if this amount, the recoverable amount of an asset is less than the carrying amount, then we say that the asset is regarded to be impaired. And therefore, this difference, the difference between these two values, that one is known as the impairment loss. And actually, we say to compute the impairment loss of an asset, we said we take the carrying amount, this one, minus the recoverable amount minus the recoverable amount. That's how we compute the impairment loss. But what is important, first of all, for you to recall here is that an asset is said to be impaired if the recoverable amount is less than the carrying amount. And actually, in this case, we say a company is supposed to undertake something called an impairment review at the end of each year, basically to determine, or a company is supposed to carry out an impairment review at the end of each year if there is some evidence showing that the asset could be impaired. We talked about a number of factors, or basically a number of indicators, which could show that the asset is impaired. Like one is when the asset is physically damaged. You can buy an asset today, and maybe like an asset like a motor vehicle, and that motor vehicle is involved in an accident. After 1 month, if you had bought that motor vehicle maybe at 2 million, if it is involved in a road accident, you can't sell it at 2 million because it is physically damaged. Number two, we talked about the performance of an asset being lower than expected and other factors. So therefore, we say anytime there is an evidence which shows that the market value of an asset has reduced, we say it is important for the company to carry out an impairment review. Impairment review, basically, we say entails comparing two values, the recoverable amount and the carrying amount, and the company determining whether this value is less than what? Carrying amount. If this one is found to be less than this one, we say the company should proceed and determine what? The impairment loss. So therefore, that is the first thing you need to recall even before we come back to this particular study here, that an asset generally is said to be impaired if the recoverable amount of the asset is lower than the carrying amount. We have said the carrying amount is the same with the net book value, which is equal to the cost minus accumulated depreciation. Then we also talked about how we compute this one, how we determine the recoverable amount. And actually, the recoverable amount here we say is higher of two values. I don't know who can be able to remember. Who can be able to remember when determining the recoverable amount? We consider two values, and out of the two values, we take the value which is higher. Who can be able to give me those two values? The two values which we consider here. Yes, I'm told one of it. One of the value which we consider here is the value in what? Value in use. The value in use, that is one of the value which we consider here. And actually, in this case, we say the value in use, this one is computed as the present value of the expected cash flows. Of the expected what? Cash flows. So the present value of the cash flows which will be generated from the use of the asset. That gives us the value in use. You discount the cash flows to be generated from the use of the asset. We take that all, something called the net realizable value, or in other terms, something called the net realizable value or the net selling price. The net selling price. The net selling price in this case, we say, is basically the amount at which you can sell an asset at currently minus the cost to sell. If you want to sell the asset, you can sell it at 2 million, but for you to sell that asset, you need to incur some cost. So like advertising costs and so on, maybe you sell it at 2 million, you incur the cost of maybe